In this video, traders, I want to talk about trading biases and a warning. Stay tuned. Hey guys, a warm welcome to you. All right, so a while ago, I think I did a couple of videos where we talked about different biases and how they were called. So like the anchoring bias, the confirmation bias, the recency bias, all that type of stuff. And that's great. And I think they're well worth watching. They're good videos. You've got to be very careful about these things. In this video, I want to look at it from a pure trading perspective. So I'm not going to necessarily categorize them as textbooks would, but how I think they can negatively impact your trading if you're not careful in various different trading scenarios. So I recently did a podcast where I talked about a bias that I had in a sauna, funnily enough. I'm not going to bore you with that story here. Let's just get straight to the meat and potatoes here. But there was a parallel with like, okay, I had a bias there about what I expected these people to say, and that, based on a previous experience, they didn't say that. I was well off the mark with it, and it kind of made me think, you know, we really are as human beings very susceptible to biases. And in the markets, that's the case, right? Because very often I think that if you have a losing trade or a losing day, the likelihood of the next trade or day being a loser is way more than, let's say, 50%. So imagine you had a 50% chance of success on your trades. Let's imagine it was a coin toss strategy, just for argument's sake. I think the fact that you've had a loser before changes the way that you deal with that day. Let's look at the day. Okay, imagine you had a losing day, right? Let's imagine you lost, I don't know, let's say $800, right? You've lost $800 the prior day. And now you're coming into day two. So that's day one. You're coming to day two. Now, subconsciously, you're thinking, that was frustrating. I didn't like losing that. And okay, you've got to put this in context. If your normal kind of winning day is $5,000, then that's probably not going to affect you. But let's say you kind of hit your loss limit there, or even if you exceeded it and broke a rule, you're just feeling not that good about it. So the next day, what do? You're like, okay, I don't want to feel the same way subconsciously. The prior day stung me. I need to get myself back in the green so I can feel good. And that might be just sitting there subconsciously. And this, by the way, that can lead to tilt and stuff. But if we just go a few steps back from that, when you start to take a trade, you might be a little bit more hesitant to pull the trigger, which then might trigger some FOMO into a trade. Like, okay, I see it. I normally would pull the trigger. Yeah, but it could be, and you start second guessing because you don't want to be there. You want to be in the green. And so that might be something that affects you going into the trade. More than likely as well, if you're a day trader, when you're in the trade, you're going to be very aggressive with the stops. You're like, oh, it's not working. You know, the market maybe kind of take a long, and then it kind of chops around and it does this and it does that and it's up a little bit more and it's down a little bit more, and you're like, I'll cut it, and you never give it a chance to breathe because you're so concerned about having a loss. That's more of a fear than actually the trade maturing and going up to your target that you expected, having that fixed stop position structure in the trade in a logical and correct manner. So that bias from yesterday is being dragged over to maybe some hesitancy in the trade, maybe some extra management of the trade, over managing the trade, maybe not holding the trade for target because it's more important for you to get green on the day than it is for you to actually get the trade to mature. And that, we know that's not the right thing to do anyway. You have to look at each trade objectively and let the trade give us what we need. You know, what we're expecting from it. If we're expecting a 3-to-1 and it's set up as a 3-to-1 and we structured a 3-to-1 and that's the setup, then we should be holding for 3-to-1. But often we're like, it's just going to outbag it a little bit. And so this bias can so easily impact us. So we've got to kind of have a way of resetting and a way of saying, okay, hey, listen, I know yesterday was yesterday. I don't want to trade any differently. It was, I don't feel great about it. I'm not going to be ecstatic, but I'm not going to let it influence my trading. And sometimes confronting that verbally makes you go, okay, that's interesting. There's no bias, or I may have a bias, and I might not be able to articulate that bias, but I want to be very, very mindful that I'm trading in accordance with my rules and I'm not managing things and trading out of fear or trading out of what's happened before, or maybe it's like a recency bias or something. So there's that. I'm being very careful of that because I generally think that most people, that is the case, especially for kind of traders going through the process, the learning process. Negative day, likelihood of the next day being negative is probably quite high. And that's often why we get this cascade spiral of loss, 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 loss. All right. What about from a technical perspective? Technical perspective, you know, we know all about the biases, guys. People have been buying dips all this time, buying dips, buying dips, buying dips. they've got this bias that that's working. When it stops working, they're like, well, it's working before, I'm just going to keep doing it. And they take too long to objectively look back and go, conditions have changed, the story's changed, things have changed, and go, right, there's a new strategy required now. I need to just abandon my thoughts that that's a successful strategy, or just put it on ice for the time being until we continue back to the previous conditions. So there's that. And from a kind of day trading perspective, like the open, for example, you might have opens that have been driving off, whether you've caught them or not. So you're trading at the open, you see it drive off, you say, that would have been a quick, nice profit. You see it again, maybe different directions. And so that recency bias makes you position for that without looking objectively at the situation. Go, right, it's going to rip off. I need to chase that first bar, and it comes back and stops you out. And you only really did that because it did it very recently. Naturally, it might have only done it for the past 3 days, and every other day if you go back for another 15, 14, 20 days, you're like, actually, that's quite rare, but because it's happened recently, you're like, I want to get on there. And so that bias recency bias can then bleed into your current day, and it stops you being objective. So there's loads of examples, guys, but I just wanted to kind of do this broad video and say, hey, just be mindful that that's human beings. We have these biases, and sometimes we don't realize it. And then sometimes, we have to be aware that these can negatively impact our trading, and just doing a quick cross-reference checklist in the mind. Anything yesterday that might influence the way I look at today? Yeah, it was a strong trending day yesterday. Can I really expect that today? Well, let me look and let me objectively assess that, rather than using the prior day as evidence to suggest that yesterday is going to be the same as today. Same with kind of your own P&L as well. All right, guys, take care. See you next one. Keep your risk managed. Bye-bye.